Good to be here on a shortened week, uh, Bob. But I want to talk to you about what you can see, the potential that maybe the guys that have been waiting for a silver squeeze are going to have be able to witness it and participate in it in 2024. How
Uh,
are you,
uh,
buddy?
good. How you doing?
Good, man.
Yeah, it's funny because I tell you that, and I've been kind of mentioning this on other podcasts, and really since the Silver Symposium back in October when I spoke there, the retail investor is basically disengaged from this rally since October. It it's almost like there's this growing discontent, almost this frustration, and you still see it up until into December, where the public isn't believing in the markets or in the gold and silver market. They're not believing in the rally. They're selling into the rally, um,
Interesting.
and and it's not just I've seen a little bit of that. The other retail dealers have seen that. Wholesalers have seen that. The industry itself is laden with inventory at the moment. People that are selling back. Yes, some of it's IRA distributions, which is very seasonal going into the end of the year. But you have a lot of people that bought gold and silver, or say silver, back in 2010, 11, 12, 13 timeframe, that have been waiting almost 15 years for this metal to do something. And it's just, as interest rates have risen, it's people have said, I might as well put my money on a 5% yielding T-bill, and I don't have to deal with the volatility ever again. And that's what's interesting. I mean, the silver
Yeah.
squeeze thing is basically just been shelved. Oddly,
Yeah,
when
I think
gold,
they have a name for slammy whammy every time they sell. What was they saying on Twit?
yeah,
Huh?
Mr. Slammy.
Mr.
That's
Slam.
very clever. It's just this disconnect almost, that no one can believe that this market can rally, and I think we've all been the last 3 years. It's like every time it's popped its head up, it's like a lawnmower's gone right over it.
Yeah.
And it just seems like it's built this sort of this bias that, okay, this thing's never going to run, and if it ever does get a chance, the futures market's going to come in and just short the crap out of it. And
Okay.
that's, yeah, I mean, that's been the sort of the backdrop here, which from a sentiment standpoint, I'm like, this is like the greatest thing in the world, because 2 years ago everybody was high in a kite, or high as a kite, talking about silver, how it's going to go through the to the moon
Right.
and so forth, and maybe the setup was there then, it's as well, but to me, when you climb this wall of worry, it forces people in at much higher prices, and that perpetuates the bull market, and that's maybe what we're seeing here, and really since the summer I've been on this kick, looking at the 2008, 9, 10 time frame in the silver markets, comparing it to today's markets, the last year or so, and you've had this sort of
Do you
series of
have that
inverted.
chart with you?
I don't. I have I have one chart I was going to show. I posted it last week on Twitter. It's sort of an overlay of today's environment versus 2008's environment, and
Okay.
and 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 not that I was looking at MACD, and this is a monthly chart, so the
Well, go ahead, put it up. Just
um
share the screen. And and I wanted to ask that part of this disillusionment with silver, could it be because of the huge Bitcoin rally and all the alts are, quadrupling, and stock market never really failed, and a lot of people bought silver because they were worried about, the stock market. So could that be part of the reason why the public is giving up on it?
possibly. I mean, yeah, you have a lot of competition out there with the metal. It's odd, because what I try to do is I look at some of the dealer positioning. You have It's funny because this move in the metals has been driven more. I mean, yes, you've had a lot of Indian buying of metals that came out in October because of the later Diwali holiday, and then China's been consistently buying as well, especially on the gold side. But the what's interesting is that the options and futures market has sort of lit up. You've seen refiners, which have really taken the role of bank trading desks, the traditional bank model where they loan to miners and then they're sitting there trading on a proprietary trading desk with either for or against clients or on a proprietary basis. But what you're seeing now is the refiners have developed trading desks that sort of simulate what the banks used to do, and they actually have been getting heavier into the options world because if you look at GVZ, which is the gold volatility ratio,
Oh yeah.
that thing is just scraping along the bottom, and these trading desks see that index or that volatility index going one way, and that's up, and they want to capture that move. And now you had the CME. I think it was last week or 2 weeks ago
I
announced.
wonder if it kind of shadows what's happening in the VIX, because that's
Well,
been scraping along the bottom too.
yeah, possibly, but the VIX, maybe I don't know if people are selling vol
Yeah,
on
they are.
gold. Yeah, yeah. I
Oh,
mean, but
oh,
for the income side, because yes, you could. I guess you could make the case that if you're doing it in one asset class, maybe they're doing it in the other. But with interest rates higher, the carrying costs of gold have gone up, so that sort of disengaged the market a little bit last year. But from what talking to some of these trading desks, they, they want to capture this volatility, this move to the upside. Typically with gold, oddly, with sometimes maybe you could go back and do correlations with price and volatility with gold. It doesn't act similar to um, what the S&P does with its volatility index. Usually when that volatility index spikes, usually the prices crash. It can be opposite with gold, and that's that accentuates the moves, and I think that's what's been sort of pushing the market around
so they're
more
buying
is
calls. They're buying calls on GSV.
yeah, either that, yeah, or GLD. You're seeing these, and then the futures markets. You're seeing more activity on the derivative side on those indices or that ETF or the futures market.
Are there options on GSV?
I don't know if there is or not. I'm not sure.
Yeah.
Yeah,
Okay.
so because I don't try to
Check it
watch
out.
the yeah, I watch the index. I don't necessarily trade if there is options on it, but um uh yeah, but that's sort of what I've been seeing is that this move has been captivated by the derivatives market, and then the CME came out last week, I think it was, or the week before, and talked about how they're going to introduce. I guess it's a proposal, but it'll probably go through. But they're going to introduce daily expirations on gold and silver contracts, whereas right now I think it's twice a week that they expire. So you're going to add this zero.
Yeah, zero DTE, whatever,
Yeah, yeah, yeah,
like in equities.
yeah, yeah, yeah. That daily expiration, that's going to accentuate the volatility, which I think that's what maybe these trading desks are picking up on, and oddly, that is what could catapult the price of the metals, because what you're seeing on top of all this is now you had one of the large miners down in Australia just blow out their hedge book back in November. I mean, that was one of the you're trying to figure out why the price is going up. Of course, no one, unless you're a fly on the wall in some of these trading desk firms, you don't really, you don't hear everything. But it came out that one of the big Australian mining companies unloaded their hedge book. They're done hedging the metals. They've lost so much money doing it. And I think maybe that's what we're starting to see is this unwind of hedging, because especially with silver, you're sitting near the cost of production for a lot of these primary silver producers, and that's why hedge when you're barely making any money anyway.
Yeah,
And that's
but gold, they have $600 average profit
yeah.
from their 1,200 production costs. I want to move towards if there is going to be a squeeze, it's going to be because of the paper market shorts, right? And what the exchanges have as far as inventory. And you look at the quarterly options expiration. So December, is gone. It didn't happen. But are we set up with what's happening at COMEX as far as warehouse stocks on either gold or silver or the LME, to where if people start requesting delivery, there just isn't enough? I know we've been in that position before. Are we still in that position?
Inventories have risen about 20 million ounces from the low on the registered category with the COMEX. And part of that is this quietness in our industry. Metal's been being put back onto the exchange because it just isn't moving as much in the U.S. You don't have
Okay.
the retail demand for bars and coins. You have sovereign mints around the world that are stuffed with inventory at the moment, because they're getting ready to roll out the 2024 coins, whereas their distributors still have 2023 coins. So you have this sort of backing up of inventory, and that's adding to some of the metal that's put on the exchange. But at the same time, which I think a lot of U.S. investors need to understand, is this isn't a U.S. centric story. This is a global story, and that's why watching the activities of all these foreign central banks, especially in the gold market, the demand out of India for silver, for example, as well as other countries, that's actually starting to resonate more. The U.S. will follow up. I mean, obviously, I think you're going to need a price breakout to maybe convince the public that maybe this move is for real. But that's typically how silver works. You
Who
don't
was
know.
who were the sellers Sunday night in Asia when we traded at new all-time highs in gold?
That's a good question. I'm sure they blew out on the buy stops on the upside, and
Yeah.
then you probably had this thing was so high in terms of over the Bollinger Bands and extended and all that kind of stuff. I'm sure you had guys taking shots, to try and push it back down. But like we've seen, I mean, that's a very illiquid market environment, so things can move in two directions. I think it just got to a point where anytime you mix margins and leverage and a volatile small futures market, it's just a mixture for complete chaos. And I think that's what we had, just a blowout to the upside, and then just the buyers basically were gone, and then everyone tried to start selling or shorting into the market. There just wasn't any demand there, but I think that kind of cleaned out anybody who was short initially, and then at the same time, it's doing this sort of scary out type of mentality where you get this real volatile move, and everyone that said, I'll when gold is at 2050 and then it's on its way to 2100, and they go, I'll buy the pullback whenever the pullback comes, I'll buy it. And then of course, then the bull pullback comes and it gets really violent. It scares people. It's almost like a deer in the headlights, and that's sort of my thinking is what's happening in this market. It's getting the volatility starting to kick up. It's scaring the public from jumping in. It's because the moves are just too violent. It's kind of like when Bitcoin. I mean, Bitcoin's probably the perfect asset to look at in terms of my volatility. I mean, I thought silver was volatile until Bitcoin came along, but the same mentality. I mean, Bitcoin goes from 17,000 down to 14,000. Everyone says it's going to go to 12, but then it never goes to 12, and then it starts going back up again. Silver could be doing that same type of move, and then you just have this constant demand of central banks continually buying gold, and obviously they see something that obviously a lot of us don't maybe not see right away, but whether it's the balance of payments or back in their balance sheet or worry of their own currency, worry of continued inflation, whatever it may be, but they're anchoring their balance sheet with gold somehow. And that's kind of like that's what's breathing, I think, this sort of confidence into at least the gold market, where it's walking up this, it's slowly just grinding higher, which is perfect. That's what you'd want to see. You don't want to see this, just massive spike. Everyone gets squeezed and the price doubles. I mean, it's nice to see that kind of stuff, but it doesn't last and it just
So are you
crashes.
adding to your long positions, Bob?
Yeah. I mean, I still see high net worth individuals buying the market. It's the public that's kind of backed away. And that's been sort of the classic, almost the classic tale since 2019 or so, when you started to see a shift in reallocations. And December, January, February timeframe is actually a very favorable seasonal pattern for the metals. I would imagine maybe January you see some type of seasonality, allocation shifts, that type of thing, where maybe people are putting, with the big gains in the S&P and so forth, maybe they start to reallocate a little bit, back into maybe other asset classes, because certainly the attention has definitely been towards the S&P, the top 7 stocks, that type of thing, and that's sort of overshadowed. But the metals are just, they're sitting in the background. You'd think that gold would be on front pages everywhere, but it's like, especially when it's or just hit an all-time high. I mean, if this was Bitcoin, you'd be seeing laser eyes
Yeah,
everywhere. But
right.
you had this article by Ken Fisher over the weekend that basically talked about how poor of a job gold has done in terms of performance, and it's just this wild asset from the Wild West, so to speak, that you got to catch it just right, because it's like trying to ride the lightning. I mean, so that didn't help. That wasn't a bullish article at all. So that actually added, probably from a contrarian standpoint, this further
Yeah.
hesitation for people to want to own this asset.
Yeah, the miners have been acting better.
Yeah, yeah. I'll tell you, you nailed it. When back in October, when you bought in, I mean, that was it. I mean, you could have cut the sentiment, negative sentiment with a knife. I mean, it was nobody had interest. I think you talk about the Mr. Slammy comment, which is
Yeah.
funny. But the same thing happens with, you could see it with the mining stocks. I mean, it was just I put out a little thing on Twitter, like one of those you vote or whatever. One was the mining companies, do they mine metal in the ground, or do they mine their own investors out of their money? And it's like a 75% toward weighting toward they're mining their own investors, which that's the junior mining companies. I think a lot of these guys are going to end up going broke, but it's been a very frustrating game, like you said, in the mining sector. That's been horrible for people,
Okay. Well,
but
it's shaping up. They've all really had nice performance. They didn't sell off the way the physical market did at that reversal high up there. So, I just want to let people know this is where they could find you, Bob, at goldsilvervault.com.
yeah, yeah,
And okay.
yeah, and
And
also on Profits Plus ID on Twitter.
right. Okay. And I have made a purchase through Bob, and uh, delivery was smooth, fast, the whole deal. So, Bob, I hope you have a great 2024.
Definitely, you too, Dale. I appreciate it.
Yeah, so great talking to you, and you have a good eye. Let me know if you see anything. You know how to reach me on Twitter and elsewhere. Even have my phone number if you see something huge happening. So,
Definitely,
Bob Coleman, everyone, follow him on X at Profits Plus ID and check out his website. He has storage and everything there. So, thank you, Bob, for being here on a day where most are taking off.
definitely. No, my pleasure. Thank you, Dale.
All right. Okay. So, everyone, that's a wrap. I don't know if they're having the morning ed show anymore. I mean, not anymore. I mean this week. So we'll be back tomorrow. Good hunting. Don't just count your pips, count your blessings, and we'll all see you tomorrow. Cool. All right, Patrick, Andrew, you're welcome. People are thanking you, Bob. Okay, so good luck the rest of the day. Tread lightly. You're welcome, Laura. Remember, it's real thin. It's okay if you wait another week to start at it full time. Okay, take it easy, everyone. Happy Boxing Day. Richard, you put on the gloves and I'll be there in an hour. I'm kidding you. All right. I was going to tell Steve to put on the gloves. All right. See you guys.
Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.